Keep watching as I show you how you could have protected your stop loss while you traded ANZ during the last 10 months. Well, hello everyone, Darren here from Safety in the Market. And I just wanted to show you through the last almost a year with ANZ, and some of our students who only trade stocks have been following ANZ, and we've been working out how to manage our stop loss on this market along the way. We've got our disclaimer. Everything I talk about today is purely based on an educational purpose only. So there is ANZ, the daily bar chart going back around a year there. That's our April low in 2025. ANZ is one of our top 4 banks in Australia and part of the ASX top 20 stocks. So our students were talking about this low coming in April and looking obviously to try and trade it going forwards. I'm going to take you out into our software profit source, and I'm showing you this April low here. Like I said, it's a daily bar chart. I've got some weekly turns marked on the chart there. That was our April low. We had our first range out, so a nice reaction, which is always nice when you're wanting a low to come in, you're expecting a low to come in, and then the market reacts strongly from that low. Then you expect a retracement. We've got a 50% retracement here, and some of the students were very keen to watch this market carefully as we broke up out of this 50% retracement. We've got ourselves a daily trade entry there as this red bar gets broken to the upside. All right, and our students would have their stop loss underneath this red bar, enter as it's broken above. But then as you can see, the market slides back down, and it might not be so clear for you to see, but this bar here has gone 1 cent below our entry bar where our stop loss was, and we've been stopped out. Okay, so all excited about this low. We've watched it storm upwards, we've watched the retracement, it's all made sense. We've got into the market and then been stopped out by 1 tick. So we're just going to head inside and just have a look at what that looked like. There was our entry. Stop loss was underneath here. That's our 50% retracement I was talking about. We had a profit target up here. And yet we've been stopped out, within 3 days. Okay, so, someone's popped our balloon there. We have had a little chat and discussion, a few emails bouncing around, and the major consensus was we needed to change our approach with the stop loss. So this was our result from that first trade. I'm just going to keep to a $5,000 account each time. We had a reward to risk ratio of 2 to 1 on this occasion, or as you can see, it's sort of a 2.5 to 1, but I'll always round that down. I'm going to keep the account at 5,000 all the time. That makes our risk of 5% 250 all the time, and that's just to keep things nice and simple for you to follow. This video isn't all about showing you big green numbers and how we can make millions and millions of dollars. It's about this stop loss management. So that particular trade, we lost $250 in 3 trading days. Okay, so that was our problem area. We were too close because, as you can see, the market moved up and away afterwards, but we were just too close. And if this is going to be a strong low, then surely we've got to believe in it enough to allow our trade some room to breathe. So we came up with a group solution to keep the stop loss behind the weekly swings instead of our entry in the daily swings. All right, that's what we came up with. We'll head back out into the profit source. All right, and that was where we got stopped out there. So I'll just chase us forward. Okay. All right. Now, just slide the chart over for you. Then we've got a little gap down here. And the next day we've gapped back up. So we call that an island reversal bar. Okay, and you can learn all about these bars in our course. And that's a sign of strength for this particular low. It also had some retracement values, and we use this range to predict where we might turn. Okay, it's a seasonal date, which some of our students will learn going forwards. So we're happy to then take this trade this time, and I'll just show you the setup. Okay, so that was our campaign pivot. We're going to follow our stops behind weekly swings. This was our trade 2 setup as we entered here. And I'll just show you in profit source because we can get a bit closer. Normally we would enter at the break-in of the top of this bar, but as you can see, we've gapped up. So we can still enter. It just means our entry and our stop loss are a little further away. Okay, so not ideal, but weighed up against how strong this island reversal is, we'll take that. And the fact that we're going to monitor our trade on a weekly basis, even though we're entering on a daily chart with daily reasons, we can allow for that little extra bit of risk there for trade number 2. All right, so we'll follow it through. And as you can see, the market's looking nice and strong. And I'll just slide us along a little there. Now, the software will always sort of predict where the next weekly top could be, top and bottom could be, but obviously we have to keep on top of that ourselves. All right, and eventually the software will land on the actual top and bottom. All right, we have now got a trade 3 setup here. So stopped out of trade 1, trade 2's sitting pretty. We've launched back out of there. We've now got a third opportunity to enter here. Okay, and that would become a weekly swing low if we push on higher. So we enter that on the day chart. We'll just follow through and up we go. All right, so we've now, this is 1 week, we've now broken higher than that week. That just confirms our entry there. But also we've got our, from our trade 2, our stop loss was down here. We've now got another higher weekly swing. So our stop loss for trade 2 can now be moved up under this swing alongside our stop loss for trade number 3. And we're in 2 trades now. Okay, and I'll just quickly show you that one. That was our entry there. And our stop losses are moving up. Okay, cool. All right, so happy with that. And each of these trades will have a profit target. Okay, so we might see, oh, it's a bit too far away at the moment. We'll just keep going. We're happy with that. We're happy with our stop loss moving up from trade 2, so there's no risk on that trade anymore. I'll just keep sliding us over. And market's looking strong now. So it was a strong low in April. And I'm losing some of the bars, so I better just squeeze that down. We can lose number 1. We want to keep number 2. And here you can see at the top of the chart, these are our profit targets. That's for trade 2, 36.39. This for trade 3, 35.83. Okay, and that was just our profit target for trade number 1. All right, so we'll keep moving. You know, if you think about it, we're basing our stop loss management on the weekly chart. Can you imagine you were trying to base it on the daily chart through this sideways mess? I'm sure you'd end up jumping ship. Maybe you trade 1 hour or 4 hour charts, then you'd certainly be in a bit of trouble during these particular movements. All right, and then we close down a little, and we've broken down below these weekly lows here, which could potentially give us a weekly bottom. Then the trading gods have given us a nice inside bar. So if we were to enter at the top of that bar, we'd be then closer to our stop underneath here, and we'd have trade number 4 underway. And there it is. Okay, there it is. We'll go inside and just check it out, what it looks like. So we got in there. That becomes our weekly low, having gone below all of these weeks. You can see I've got them in pockets of 5 days each time, which just helps me see the week and how it played out. We've got a weekly low there, which we then break upwards and above. So that is confirmed. But what is also happening now that we've got a new weekly low is our stops that are under this weekly low from trade 2 and trade 3 can be moved up under this swing. So there's absolutely no risk left on trade 3, and trade 2 is just getting stronger and stronger, and we're heading up towards our profit targets for those trades. And now we're in a 4th trade. So happy days. Okay, I'm just going to slide us over. We know that that's 2 and 3 and our profit targets, and we'll just keep going. All right. So we're just sliding our charts around, and there you go. So that we can just grab number 3 there. That's our target for trade number 3. So let's head back inside, and we can see our target hit there. We've completed trade 3. The stop loss had moved up to there, but we've hit our targets, and now it's all over. It took 58 trading days. Now that's going to seem like a long time for some of you if you're used to playing with intraday charts. We'll only use intraday charts for entries, and then we'll step back and look at the bigger picture when our guys in our active trader program are placing their trades. So just that summary there, our reward to risk ratio is 10 to 1. We're always looking for 10 to 1. Again, I've got that flat $5,000 account. That was our risk. That's our reward. And it's taken 58 trading days. Okay, excellent. So we'll just head out here. All right, so that was trade number 3. And the very next day, trade number 2 is taken out. So we're having a good week. That was Monday, that was Tuesday. All right, and we've hitting some targets here. So let's have a look. Trade 2 took a bit longer. We'd moved the stop twice. Now we've hit our target. 80 trading days later. That was a 13 to 1 reward to risk trade. Again, I haven't added the profits to this. We're just going to keep that nice and flat. It's more about this stop loss placement. That's our reward for trade number 2. Happy with that. It's taken 80 trading days, but it's felt nice and comfortable and safe all the way through. Okay, we'll head back out and we'll carry on. All right, as you can see, the market's working its way through those points. I'm just going to slide us because 2 and 3 are done now, so we're only interested in trade number 4. All right, and then, once again, for trade number 4, our stop is down here. Look at this market action here. What would you be doing in a 1-day chart, a 4-hour chart here with your stop loss? The emotions might be running a bit thick. Okay, then you get a down day and you think, oh my goodness. And then we're up again. You think, oh yay. Okay, you're either taking profit or jumping out, or at least having our stop loss behind the weekly swing keeps us calm, keeps us out of the way. Okay, stops us from making any rash decisions about our trade. Now the market heads back down, but we know it's got to head back down in order for the market to balance out. They don't go up and down in straight lines. And then we've got another little gap down here. Remember what happened last time we had a little gap down? The market reacted. Okay, and our students in our active trader program will be measuring these ranges all the time, the reactions, the retracements, the ranges. Some will be measuring time, etc. And they'll be working out an area for the market to stop falling. As it's then bounced back up, that's an opportunity for us to get long again. We'll just head inside. And there's our entry for trade 5, the weekly setup. We're using the daily chart to get in. And then the weekly swings are going to look after our stop loss. Okay, so we'll head back out. Once that is confirmed, as you can see, we've broken the previous week's high there. So our stop loss for trade 4 now moves up underneath swing number 5. There's no more risk on that trade anymore. Okay, so always a good place to be. There's our target for number 4. Our target for number 5 is all the way up there. Okay, so we'll worry about that at a later date. Keep moving us along. I might need to slide the chart. We know our stop loss has come along here from trade 4, so we don't have to see number 4 too much anymore. Okay, so more of this sideways movement, and just talk to yourself about what would be happening. If you're a 4-hour trader or you're a 1-hour trader, what are you doing in this kind of situation where the market's, getting you excited, then getting you scared, and beating around all over the place? Then you get a bar down like this and you think it's all over. This bar, you got excited, and we're just down here. We're just calmly sitting down here. We know the market has to play out and do its thing. So it heads down. We've now got a lower weekly swing here. We've now clipped above this daily bar there. Look at the open and the close on that bar. That's an opportunity for our students for the 6th time to get into this market. We'll have a look. Okay, a little slide there. Our target is up above 39.65. Now, we're getting closer to this culmination area of 40.54. This is an area that we have been looking at for maybe this bull market to hold up for a while. So it's come from various ranges along the way before and during this campaign. But there's a cluster of prices around this area here, just above. That'll be the lowest one. I always look at the lowest one. There'll be 3 or 4 or 5 other price points up there. But my thinking is we might not reach them. So I always mark out the bottom one. I'd rather get out earlier than later, or waiting for these to get hit and leave that dollar in for the next guy. I'm just happy to take my profit target. So trade 6, we'd be getting in down here. Okay, we'll head back out there, see how it plays out. You can see its profit target just up ahead there. And the market looking strong again. Now, what did we forget to do? Our stop loss. It now moves up here. For 4 and 5 and now 6, We've got 3 stop losses underneath this swing low. Things are looking good. Okay, feeling pretty happy about ourselves. The market's just slowly moving up. You know, this takes patience, but this allows you to go back and do your studies. Our students are always trying to improve and expand their form reading and their knowledge from David Bowden's books, studying W.D. Gann. Okay, so that's where we go when the market's sort of moving sideways. We're not sitting around staring at screens, worrying what if this and what if that. Okay, so we're into 3 trades currently, and the market's looking good. Up it goes. Yep, so higher bottoms along the way. Okay, now I've just breezed past this a little, and we will discuss this in more detail later on. There is a 7th opportunity here. But under the guidelines in David's books, the entry, see how big this bar is? It just means if we enter there, our stop loss is a long way away initially. And we're almost too far. We're using this range here. We're almost too far into the trade for us to enter. So most of our students wouldn't enter trade number 7. So I'm going to call it a no trade. I just wanted to show you that there was an opportunity, and for some students who were on the ball, they may have got in early in this day or used another trigger the few days afterwards. But from the basic textbook, that entry there is outside of our safety limits. So I won't take that particular trade. And the target is beyond my green line here. And I've tried to keep as many targets as possible below this green line because I'm thinking that might be the end of the campaign. All right, so I just thought I'd show you that anyway, and we'll keep moving. Bang. Okay. All right. Who saw that coming? Now, just before we move on, even though we couldn't get into that trade, we can always use the swing low to progress our stop losses. So we've got stop losses 4, 5, and 6 now underneath this weekly swing. Okay, so no more risk on the table for 3 trades. And we've already closed out 2 winning trades after our initial loss. Now, look at this bar. There's a couple of things going on here. Let me clarify what's happened there. So we have obviously surpassed this line. This was our trade 4 profit target. But look how we've gapped past it. That's the open of the day. We were looking to take a profit down here, 39.14, but actually the open was 39.39. So we wouldn't actually get our profit until up there. All right, so that's always a nice thing to have, and there it is. So our exit is up there instead of down here because the market gapped past our target. All right, we're happy with that. 95 trading days for trade number 4. Our stop loss had moved up 3 times. We've got a whopping 15-to-1 reward to risk ratio there. Okay, again, I've kept the account the same. Not trying to blow up the numbers here. We just keep it nice and flat. For that sort of account, that's the reward you would take for that trade. And it took 95 days. Okay. But also what has happened is we have hit trade 5 target as well. Okay. So 48 trading days, only 2 moves for the stop loss. We've worked our way through all this stodgy market action here, and we've got our rewards right bang on the top there on trade 5. Okay, trade 6 actually got hit during the day, but I'm just going 4, 5, 6 here just to keep it nice and simple. That was a 14-to-1 reward to risk ratio. Our reward would be 3,500 there and 48 trading days. All right, and as I suggested, trade 6 got hit on the same day. What a day, 3 trades all hitting their target with this unusual but very welcome bar there from the market. We only had to move our stop loss once for trade 6. We got a 6-to-1 reward to risk there, $1,500, and only took 22 days that time. Okay, and I just want to show you now that trade 7. So that would have been our entry there, but like I said, this big bar here would prevent most of our students wanting to enter that trade because of the risk value in the big bar. You know, our entry's up there, our stop loss is all the way down here. Okay, and we like to keep that within sort of 33% of where we're going to keep us safe and keep that sort of 2-to-1 or 3-to-1 minimum reward to risk ratio. Okay, so we didn't enter there. It was outside our risk limits, but I just wanted to show you that the very next day after that big bar, that it did get hit, even though it was beyond our culmination area line there. It did actually get hit just at the top there before we sort of fell away a little. Next day, that was 4, 5, and 6. There's 7 getting hit there. And then since then, the market has sort of fallen away somewhat. Like we're even down below, or have been down below this weekly swing where we had a possible trade at 7. So this green line looked after us in the end. Okay, we'll head back inside. That was our cluster. Like I said, we had 5, 6 reasons for a top in the market there based on all of these ranges and some previous work. We've been in the market 10 months. Okay, it didn't start out so great on our first trade, so we started to look for other solutions that we can use from David's teachings on how we could use our stop loss. We're always working with multiple time frames. We're not stuck in one time frame. We have minor time frames and then major time frames, and we're always looking to use them together to protect ourselves and give ourselves the best chance of getting the most out of these ranges. You know, that was trade 1, and there's our stops. And as you can see, underneath the weekly swings, they never got taken out until after we've reached our sort of cluster at the top there. This one's in red because we didn't take that trade. And there's our completion levels. You know, trade 1 was down here, didn't matter because we got taken out. Trade 2 and 3 were up here and they got hit quite easily. 4, 5, and 6 on the same day, and then 7 the next day. You know, if you'd like to know how you can replicate these trades, just follow the link below and find out more about our active trader program at Safety in the Market. And we'll teach you how to consistently and safely build your trading account like this, often with 10-to-1 reward to risk trades. So just a quick summary. We had 7 opportunities in a bull market right back from April 2025. Didn't start out so well, so we reacted. Okay, we were able to pivot, we were nimble, we worked out a strategy, and then the rewards followed and the profits followed us. That last trade we didn't take, even though it did hit its target. That's part of trading, that's okay. We've got to protect our capital. So out of the 7, we had 5 wins, you know, $15,500. I didn't keep adding the profits to our account. So obviously in real life, you would have a bigger win amount there in the end. We had 1 break even, which was that no trade, and 1 loss at the start down there. So hopefully you can see, you know, if you take care with your stop loss, then you can let your stop loss take care of you and hang around for these long bull and bear campaigns. Thank you very much, guys. Again, if you want to learn how to trade like this, come and see us at Safety in the Market and join our active trader program, and we'll help you and guide you along the way. You'll be part of a huge family of traders, all working for the same means and helping each other along the way. Thank you. See you next week.